The contents in this book is only one part a wealth-building strategy used by this company to build financial independence and generational wealth. Copyright 2021, all rights reserved to my kids, Shakenya, Derrick, Chris, Leah. Let the wisdom and knowledge of how to build generational wealth in this book live on through you, and find its way to my grandchildren and great-grandchildren. I love you. Table of Contents Introduction 1 Chapter 1, First Things First, 4, The Early Days, 6, Keep It Moving, 8, How We Got Here, 10 Chapter 2, Types of Dividends, 12, Qualified and Non-Qualified Dividends, 15, Dividend Tax Rates Matter, 17, Key Metrics in Dividend Evaluation, 20, What is Short-Term Capital, Gains Tax. 22, What is Long-Term Capital, Gains Tax. 24 Chapter 3, Prepare for Investing, 28, Create Your Emergency Fund, 30 Chapter 4, Finding Your Online Broker, 33 Chapter 5, Set Up Your Stock Portfolio, 46 Chapter 6, Weekly Cash Flow Strategy, 53 Chapter 7, Portfolio Management, 79 Acknowledgements, 81 Definitions and Terms, 82 Disclaimer Notice. 85 Compared to other forms of investing, dividend investing minimizes risks and leaves investors with a good probability of making money. I started investing in the stock market in 2012 when I opened my first investment account with ShareBuilders. After experiencing more than a few losses in my attempt to be a stock trader without a teacher or a coach. Trading stocks with no experience was a very bad decision. Investing in dividend growth stocks isn't some get-rich-quick scheme. It does take a while to build up enough passive income to pay for your lifestyle. You could think of it being more like a marathon, rather than a short sprint. Like so many new investors who sabotage themselves because of lack of patience. I learned the hard way, so I had to educate myself and find other ways to invest. My introduction to dividend stocks and the benefits they would bring came at just the right time in my investment journey. I decided to put my money into the best companies I could find that paid a dividend and just leave it and let it grow. I guess you could call it the Warren Buffett way. An investment strategy he made famous, and it's made him one of the wealthiest men in the world. I found that to succeed as an investor you have to do your own research and due diligence. If you can add, subtract, multiply, and divide, you can do this. So many people overcomplicate the investing process. This is not trading stocks in the market. I'll be honest with you, investing in dividend stocks does carry some risk. And if needed, consult with a professional to assist you with building your investment plan. Building wealth, building a family, building a business, or just building a life, you need a plan. It may change as you go, but start out with a plan. For investors, the dividend investment can lead to financial independence for life. Regardless of the direction of the market, a constant and growing dividend is a dependable, consistent passive income stream. We all want to be financially independent and build wealth. If you have a family, then your focus could be on building generational wealth. If you're single or it's just you and your partner, wife, husband, best friend, then your focus could be on creating wealth that will sustain the both of you in the future. So depending on what age you are now, and how far you've come financially, it's time for you to start building. When you decided to embark on this journey, it's a big deal. It means that you're setting out to accomplish something that can change your life. The biggest hurdle to investing money in the beginning is simply getting started. Don't wait for the perfect time, just get started and keep adding to it. Know that the sooner you make a plan and get started, the sooner you can start generating passive income. I'm not here to tell you that if you use this strategy or invest in the stock market, or do anything in this book, that it's going to make you wealthy. It's just the miracle of self-discipline. The miracle process of personal development is just a few simple disciplines practiced every day. With a combination of materials, an open attitude toward learning, and your diligence to follow a plan. If you are serious about becoming wealthy, powerful, healthy, influential, cultured, or unique, your plan is the roadmap for how you are going to get to your goals. Out of all the things that changed my life for the better, it was learning how to set goals. Successful people all seem to have this one thing in common. They take action, and they get shit done. They don't procrastinate. So maybe now you're wondering, who am I, and why should you listen to me? I'll give you the short version. I grew up in a housing project on the east side of Detroit, Michigan. I began playing music in my early teens and decided it would be what I would do for the rest of my life. Something that started out as just a hobby turned into a form of passive income that I still receive to this day. But if I had any regrets about my life in music, it would be the failure to make a solid financial plan for my future, and the future of the family who would come to depend on me for it. Money fights are the second leading cause of divorce, behind infidelity. Both high levels of debt and lack of communication are major causes for the stress and anxiety surrounding household finances. A lack of self-discipline and self-control can bring you down quickly. I really needed a solid financial plan in place to stabilize my domestic life. I was a working musician who didn't have a plan not only for my finances, but for my life. Unfortunately, my marriage didn't survive that unstable environment. There is no growth without change. In 1995, I got a call from a friend who offered me a gig in Japan. By 1997, I had officially relocated to Nagoya, Japan. After working in Fukuoka, Tokyo, and doing a small tour with the Temptations, I moved to Kyoto in 2010. Although I was working in a club playing 6 stages a night 6 nights a week earning a decent salary, I felt I had at least another 15 or 20 years of healthy musical performance energy left in me. That all changed when I was diagnosed with type 2 diabetes. At that moment, my future as a working musician didn't look so bright or so long. I knew I had to find other ways to increase my income. Even if I saved almost all my salary every month, it just wasn't going to be enough to sustain me once I stopped working. That's when I started to put a financial plan together. I guessed I had finally realized how much I had taken for granted. I had no savings to speak of, there was no pension, no 401k I could fall back on. It was time for me to take some action. A close friend gave me a book called As a Man Thinketh that started me down the path of personal development and self-improvement. I was asking God for help, He sent me a woman with a book. When I opened my first investment account with Capital One Share Builders in 2012, I didn't know anything about the stock market. So I just started reading every book I could find on investing, stock trading, and money management, trying to educate myself on being an investor. I even got a subscription to the Wall Street Journal. I taught myself how to build an investment portfolio and even tried my hand at stock trading. Stock trading isn't always what you see on the floor of the New York Stock Exchange, and it's even possible to get started from the comfort of your couch. But you'd better know what you're doing before you place your first trade. It can be very risky to dive in without the proper knowledge. After experiencing more than a few losses, I began looking for other ways to invest that were not so risky. Through lots of research and due diligence, I found dividend stocks can be used to generate an income immediately and build long-term wealth. A dividend stock is a type of stock that provides 2 wealth-building opportunities. When you own a dividend stock, you can generate an income through dividend payments. Additionally, the stock may increase in value over time to boost your net worth. A dividend is the distribution of some of a company's earnings to a class of shareholders, as determined by the company's board of directors. Common shareholders of dividend-paying companies are typically eligible as long as they own the stock before the ex-dividend date. Dividends may be paid out in cash or in the form of additional stocks. Larger, more established companies with more predictable profits are often the best dividend payers. The company may choose different ways of paying out dividends. A company can also decide the frequency of paying out the dividend, meaning it can give it annually, monthly, or quarterly. 1. Cash dividend. Most dividends are considered as cash dividends in the form of electronic transfer or check. Cash dividends can be beneficial for the investors because it will provide you with regular passive income on your investment on top of the possible appreciation of the investment. A cash dividend seems a better choice if you want an automatic reward for placing your investments in certain companies. 2. Stock dividend. Stock dividends are issued by a company to its shareholders that is made in shares rather than as cash. For example, a company might issue a stock dividend of 5%, which will require it to issue 0.05 shares for each share owned by existing shareholders, so the owner of 100 shares would receive 5 additional shares. This type of dividend may be made when a company wants to reward its investors but doesn't have the spare cash or wants to preserve its cash for other investments. The stock dividend, like any stock share, is not taxed until the investor sells it unless the company offers the option of taking the dividend as cash or in stock. 3. Liquidating dividend. Liquidating dividends are issued and the board of directors of a company decide to return the capital originally. Be beneficial for the investors because it will provide you with regular passive income on your investment on top of the possible appreciation of the investment. A cash dividend seems a better choice if you want an automatic reward for placing your investments in certain companies. 2. Stock dividend. stock dividends are issued by a company to its shareholders that is made in shares rather than as cash. For example, a company might issue a stock dividend of 5%, which will require it to issue 0.05 shares for each share owned by existing shareholders, so the owner of 100 shares would receive 5 additional shares. This type of dividend may be made when a company wants to reward its investors but doesn't have the spare cash or wants to preserve its cash for other investments. The stock dividend, like any stock share, is not taxed until the investor sells it unless the company offers the option of taking the dividend as cash or in stock. 3. Liquidating dividend. Liquidating dividends are issued and the board of directors of a company decide to return the capital originally paid by stockholders as a dividend. This is usually a bad indicator because this dividend is often paid before the business shuts down. For scrip dividend, a company does not have sufficient funds to issue dividends in the near future, so instead it issues a scrip dividend, which is essentially a promissory note to pay shareholders at a later date. Please remember dividends are taxable income regardless of the form you receive them. A qualified dividend is a dividend that falls under capital gains tax rates that are lower than the income tax rates on unqualified, or ordinary dividends. The requirements for a dividend to be considered qualified are stocks that pay the dividends must be held for at least 60 days within a 121-day period that begins 60 days before the ex-dividend date, which the holder is not entitled to the next dividend payment. According to IRS rules. Non-qualified dividend, which is sometimes called, is one that doesn't meet the IRS's requirements to qualify for a lower tax rate. Most dividends paid by U.S. corporations qualify for a lower tax rate. However, one of the qualifiers is the minimum holding period. If an investor doesn't meet that requirement, the first payment won't qualify for the lower tax rate. The tax rate on non-qualified dividend can be as high as 37%, which is well above the 20% cap on qualified payment. It's so important for you to know the dividend type before making an investment. Dividends are a great way to earn passive income. However, you will need to pay taxes on any dividends you make. The exact dividend tax rate you pay will depend on what kind of dividends you have. Non-qualified dividends are taxed at the regular federal income tax rate. Qualified dividends get the benefit of lower dividend tax rates because the IRS taxes them as capital gains. Dividends aren't free money. They're usually taxable income. But how and when you own an investment that pays them can dramatically change the dividend tax rate you pay. If you don't hold the shares long enough, the IRS might deem them non-qualified, and you'll pay tax at the higher, non-qualified rate. There are several kinds of stocks that are structured to pay high dividend yields and may come with higher tax obligations because of their corporate structures. The two most common are real estate investment trusts, and master limited partnerships, Most dividend stocks pay qualified dividends, which, depending on your tax bracket, are taxed at a rate of 0% to 20%. That range is significantly lower than the ordinary income tax rates of 10% to 37% or more. The difference in these rates can be substantial. Tax rates you'll pay for qualified dividends versus non-qualified dividends. Please don't let all this tax talk overwhelm you. It's just a part of your wealth building journey. The primary benefit of qualified dividends is that they qualify to be taxed at the same rate as the long-term capital gains rate, whereas non-qualified or ordinary dividends are taxed at the higher ordinary income tax rate, often referred to as your marginal tax rate. Here's a rough breakdown of the difference in the tax rate you'll pay for qualified dividends versus non-qualified regular dividends. If you are in the 15% or lower bracket, you pay 0% tax on qualified dividends. If your tax bracket is above 15% but below the top 39% tax bracket, you pay 15% on qualified dividends. If you are in the top 39.6% tax bracket, you pay 20% on qualified dividends. The 0%, 15%, and 20% tax rate might look familiar to some of you who are active in the investing world right now. These are the long-term capital gains tax rates. These tax rates are what investors pay on gains for any stock investment they've held for at least 1 year. For qualified dividends, you gain this same tax rate advantage. Earning dividend income is a great way to build long-term wealth. It rewards the patient investor, who's willing and able to buy great companies. Dividend yield is the annualized dividend, represented as a percentage of the stock price. For instance, if a company pays $1 in annualized dividends and the stock price costs $20 per share, then the dividend yield would be 5%. Payout ratio is the dividend as a percentage of a company's earnings. If a company earns $1 per share in net income and pays a 50 cents per share dividend, then the payout is 50%. The lower the payout ratio, the more sustainable a dividend should be. Total return is the increase in stock price plus dividends paid. For example, if you pay $10 for a stock that increases in value by $1 and pays a 50 cents dividend, then that's $1.50 you've gained is equivalent to a 15% total return. EPS means earnings per share. The best dividend stocks are from companies that have shown the ability to regularly increase earnings per share over time, giving them the ability to raise their dividend. P/E ratio. The P/E ratio, or price to earnings ratio, is calculated by dividing a company's share price by its earnings per share. Short-term capital gains tax is a tax on profits from the sale of an asset held for 1 year or less. The holding period begins ticking from the day after you acquire the asset, up to and including the day you sell it. The short-term capital gains tax rate equals your ordinary income tax rate, within your tax bracket. The amount of the short-term gain is the difference between the basis of the capital asset or the purchase price to buy it, and the sale price received for selling it. Short-term gains are taxed at the taxpayer's top marginal rate. A short-term gain can only be reduced by a short-term loss. If you earn short-term gains from an investment that's in an IRA account, you don't have to pay any short-term capital gains taxes on that income. But if you decide to make a withdrawal, the amount is considered income and is taxed at the investor's or taxpayer's ordinary income tax rate. For 2020, the ordinary tax rates range from 10% to 37%, depending on your income and filing status. Long-term capital gains are profits from the sale of an asset held for more than a year. The long-term capital tax rate is 0%, 15%, or 20% depending on your taxable income and filing status. The long-term capital gain or loss amount is determined by the difference in value between the sale price and the purchase price. That figure is either the net profit or loss that you experienced when selling the asset. The Biden administration aims to shake up how the capital gains tax is determined for some of the 1% or higher net worth individuals. If the plan becomes law, those who make more than $1 million a year could start seeing the profits made by selling their assets taxed as ordinary income, at a new higher rate of 39.6%, regardless of how long the assets were held. A capital gain is essentially what happens when you purchase some shares of a stock at one price and sell them at a higher price. This is the profit you make on an investment. Again, the rate you pay depends on your filing status and household income. Trying to manage your tax liabilities on investment income can be a little daunting at first. You want to keep your tax bill at a minimum when you're receiving dividends or realizing capital gains. It all comes down to strategy and knowing what you own. With capital gains, there is one tactic you can employ that could potentially minimize what you owe in taxes. It's called tax loss harvesting. If you're new to investing and some of the language and terms used in this book might make you pause a minute, I put a definitions page at the end if you need to check out some terms. Dividend growth investing is a common form of income investing. It just focuses on buying what are known as dividend growth stocks. These are stocks which perform from both an income and a capital gains perspective. They pay regular dividends and their stock price grows. Can an investor really get rich from dividends? The short answer is yes. However, a few key concepts can help you find excellent dividend stocks for your portfolio. This will lead to surprising wealth for you in the long run. But if you're looking to making $1 million by the end of next week, then this strategy won't fit your investment plan. In the pages ahead are some of the criteria a dividend growth stock should meet for it to yield you the best returns in your investment portfolio. It's a very good sign when a company raises its dividend year after year, especially when it can continue to do so during recessions and other tough economic times like the COVID-19 pandemic. The only person you should try to be better than is the person you were yesterday. Before you go out and purchase your first dividend stock, there's a few things you need to understand. The COVID-19 pandemic has shown us just how fragile our economy can be. But building a diversified portfolio of stocks can get you paid, rain or shine. It's important to know how to evaluate your dividend stocks. Not every company offering dividend stocks can maintain a dividend payout in every economic environment. Almost everyone seems to be trying to find ways to improve their financial life. This is just one of the ways we've found that worked for us. Investing in the stock market can change your life for the better, and the sooner you start, the more you'll have in your investing account in the long run. But so many people mistakenly think that you need thousands of dollars in the bank before they can start investing. The fact is, even if you only have a small amount, you can start investing. With as little as $100 you can get on the path toward long-term financial security and build up a nest egg that you'll be able to tap whenever you need it. It's understandable if your first thought was to start by taking your $100 and buying small amounts of stock. But a lot of people don't understand how important it is to also have a strong margin of safety with their finances. For most of us, the best way to get that margin of safety is by having cash available. So it's important that you build a strong margin of safety for yourself and your family first. If you don't already have at least 3 to 6 months worth of living expenses set aside, maybe even more if you have a family and a mortgage, then the best way for you to start with that $100 per month is by putting it in a saving account as an emergency fund. With an emergency fund, you can't expect much of a return on your savings. But having that safety net isn't about getting returns, it's about keeping you from going into debt or having to tap your long-term investment accounts if you have a financial emergency. By having several months' worth of income available in cash can mean keeping life's unexpected events from damaging your financial plans. I know interest rates on savings accounts aren't very high, but this is about protecting your downside, not capturing high returns. Once you have financial emergencies covered, you're in a much better position to start investing. If you have been going on only survival mode doing your very best to make ends meet, it might be time for you to sit down and write out a financial plan that you can follow that will get you back on your feet. According to a newly released study by Northwestern Mutual, around 58% of Americans believe their financial planning efforts need improvement, but about 34% of us have done nothing to plan for our financial future. Which group are you in right now? Let the contents of this book, if nothing more than provide you with some inspiration to get started. Too many people think you need wealth first and financial planning second. I feel that's completely the opposite of what it should be. Proper financial planning will lead people to wealth creation. One of the most important principles used in this strategy is patience. Wealth is just like a flower that blooms, it needs water and lots of patience. D.C. Thomas. One of the most important principles used in this strategy is patience. Wealth is just like a flower that blooms, it needs water and lots of patience. D.C. Thomas. If you're new to the world of investing, it can seem a little daunting at first. And choosing an online broker can be overwhelming, but with a few guidelines to help you navigate through most of the basics, you'll be okay. Because you're not going to be trading stocks daily, your criteria for choosing an online broker is a little different. Although some of the basics still apply, things like commissions and fees may be different for you. For new investors, you really don't need a complex full-featured stock trading platform in the beginning. You do want a platform that gives you access to educational resources that will help you along the way, and great customer support. You already know what types of stocks you want to buy, and why you want to buy them. We're buying dividend growth stocks. A simple, to-use investing experience and commission-free trading are essentials for beginners and long-term investors. There are basically two main types of stockbrokers: discount and full service. Here's a list of online brokers that cover a variety of needs, plus some tips on what you should know before opening a brokerage account for the first time. Robinhood Fees, $0 for stocks, ETFs, options, and cryptocurrencies. Account minimum, $0. Set up customized news and notifications to stay on top of your assets. Break free from commission fees and make unlimited commission-free trades in stocks, funds, and options. Robinhood Financial is a member of SIPC. Securities in your account is protected up to $500,000. The tools you need to put your money in motion. Sign up and get your first stock for free. This platform is introducing Ipo Access. This allows investors to get in at the IPO price. You can become one of the first public investors in upcoming IPOs. While IPO shares are limited, Ipo Access gives you the same opportunity to invest, regardless of order size or account value. TD Ameritrade Fees, $0 stock trades. Account minimum, $0. TD Ameritrade is good for beginners because of all of the information it makes available to guide you into the world of investments. New investors can take advantage of all kinds of educational material, including more than 200 instructional videos, tutorials, and more. Whether you are actively trading or investing for the long term, this platform offers innovative tools and features to give you everything you need to make smarter, more informed trading decisions. You can research stocks, place trades, and manage your portfolio knowledge backed by live streaming CNBC, real-time quotes and specialists with years of experience. TD Ameritrade stands out as one of the top all-round brokerages with outstanding tools and products. Trade fees. $0 stock trades account minimum. $0 E-Trade manages to cater to active traders with one of the best stock trading platforms, thousands of mutual funds and ETFs that can be traded for free. With an easy-to-use website and friendly guidance, there's no need to feel overwhelmed. You can build your portfolio with stocks, options, mutual funds, ETFs, and more. When you open a brokerage account, you can put your money to work with $0 commissions for online US-listed stocks, plus you get easy access to your cash with a free debit card, checking, and bill pay. Investing doesn't need to be confusing. If you're not sure where to begin, they can help you learn the ins and outs of investing with in-depth tutorials, articles, videos, and more. Merrill Bank of America Company Fees. $0 stock and ETF trades account minimum. $0 Merrill Edge Sports fantastic customer support. It's a solid option for all investors, and particularly attractive for Bank of America customers. Merrill gives you the option to invest with an advisor, or you can allow the Merrill Guided Investing to take control of your account. They offer you a range of investment accounts to choose from, like general investing, retirement accounts, and education accounts. Investment products include stocks, mutual funds, ETFs, fixed income and bonds, and options. Margin trading with great order execution quality. Merrill investment professionals will build, monitor, and rebalance your portfolio for you. Fidelity fees. $0 account minimum. $0 Fidelity combines top-notch research and an excellent mobile app, a simple stock trading platform for beginners. 0 expense ratio index in mutual funds. This is one of the most affordable brokers. Investors can get an overview of what's happening right now in specific markets and sectors, and read news and analysis to help you understand the short and long-term impact in the market. You can take advantage of stock screen strategies from independent third-party experts to research stocks, ETFs, and options, or create your own screens using over 140 custom filters. Create real-time watch lists to track stocks that interest you. You can set alerts to receive balance updates, trade notifications, market news, or stock research messages via email and through their mobile apps. You can also track real-time profit and loss information on every trade. Charles Schwab fees. $0 account minimum. $0 Charles Schwab has aggressively slashed fees on its mutual funds and ETFs, eliminated common account fees, and lowered its base commissions to $0 per trade, making it one of the least expensive brokers. You can take your trading to the next level with Robo Advisor. The Schwab Intelligent Portfolio is a robot advisory that helps build and manage your portfolio so you don't have to. You can also take advantage of the premium service for unlimited guidance from a certified financial planner for a monthly subscription fee. You'll have access to a variety of investment products including mutual funds, money market funds, futures, margin loans, international stocks, bonds, and fixed income products, and much more. Cash App fees. $0 account minimum. $0 a great fit for stock-only investors seeking a no-frills, easy-to-use platform. Cash App is also one of the few platforms that offers the ability to buy fractional shares. Whether you're just getting started or already a pro, Cash App makes it easy to invest in stocks and Bitcoin. Cash App uses advanced security features to protect millions of people and payments each year. From verification locks to data encryption, they take steps to make sure your money and information are safe. With just $1, you can buy what's known as fractional shares, or smaller pieces of stocks commission-free. Choose from a broad range of stocks and funds. Try out Bitcoin or add to an existing trove. Buy and sell, send to friends and family, or transfer your funds to another digital wallet on the blockchain. Why the ability to buy fractional shares is so very important, especially for investors just starting out. You can invest with a much more modest amount of money, with some stocks selling for hundreds of dollars per share. You can buy what you can afford. For example, you might not have enough money to buy a full share of a stock, or you might want to invest a set dollar amount in a stock or ETF every month, say $100, rather than try to buy a round number of shares that have a fluctuating stock price, costing say $90 one month and $150 the next. With this feature, it's much easier to use dollar cost averaging. This allows you invest a set amount of money regularly. Over time, this may let you pay less per share than you would if you bought all of your shares at once. Because dollar cost averaging is focused on a consistent dollar amount, not a consistent share amount, it works better when you're able to invest that full amount. Otherwise, some of your money has to sit in a cash account before you have enough to buy a full share. With the dividend reinvestment plan, dividends paid out by a company or fund are automatically used to purchase new shares. When this happens, investors can end up with fractional stock. For example, say you own 200 shares of a company and the annual dividend payout was $0.30 per share. You'd be entitled to dividends worth $60 this year. If the stock is priced at $40, the dividends would automatically buy 1.5 shares. Now with no trading commissions at all the major online brokerages, you can reinvest the cash yourself with no extra cost. Through a stockbroker, you can open a brokerage account, a specialized financial account designed to hold investments and cash. The term is often used interchangeably with brokerage, which is technically the name for a business. When you want to buy stock in a company, you can't simply call up the company and buy shares, and you can't just walk into your local bank and invest. You need a specialized brokerage account, and that's where stockbrokers come in. Some of the information a broker will likely ask you to provide will include your name, social security number, your address, telephone number, mail address, your date of birth, driver's license, passport. Additional information might include bank name and location, bank account number, SWIFT code, NO hashtag. The way to get started is to quit talking and begin doing. Success is never accidental. The way to get started is to quit talking and begin doing. Success is never accidental. In this chapter, I will show you the dividend growth stocks I selected for our TAM Wealth portfolio. When you're choosing stocks for this strategy, there are 3 important dates you need to know. These are declaration date, the date the company's board of directors announces the dividend, and the payment per share and payment date. The declaration date is also referred to as the announcement date. In addition to being the date on which the next dividend payment is announced, the declaration date is also the last day on which the holder of an option must indicate whether they will exercise the option. This is also known as the expiration date. Dividend date is the single most important date for dividend investors. It is the first day the stock trades without the dividend. All investors holding the shares at the closing of the market the day before will receive the dividend. It means you need to own the shares on the day before to get the dividend payout. Payment date, the day you will receive the dividend in your account or when a check is mailed out. It's usually going to be a couple of weeks after the dividend date. But it can be up to a month after the dividend date. You may notice the stock price may fall on the payment date to reflect the dividend payment even if it has not been actually credited to investors at that point in time. Understanding how dividend dates work is useful for long-term investors. Knowing these dates can help you avoid confusion when you buy new stocks too close to the payment date and you don't receive the dividend. Dividend payouts are based on the fiscal year. A fiscal year is any 12-month period that the company uses for accounting purposes. The fiscal to use to get more information about the company. Click on the Historical Data tab, then click to change the time period to the last 5 years. Then click the icon for dividend only. This will give you every dividend payment over the last 5-year period. A successful man is one who can lay a firm foundation with the bricks others have thrown at him. JNAPRJUN September 1st week, Walmart Inc. $142.69 forward dividend and yield 2.20x. Dividend date December 9, 2021. Dividend payout 0.55. Walmart is committed toward providing great brands to customers at affordable prices. The retail giant has launched a new digital shopping destination. Investors should feel confident that Walmart will retain its dividend track record despite these changes. It's called Built for Better to help customers shop for products that promote personal well-being with minimal impact on the environment. You can shop from this platform on as well as through the Walmart app. Through this move, Walmart hopes to move a step closer toward its sustainability strategy and commitment to become a regenerative company. Although the company is in a death race for retail supremacy with Amazon, they reported a 97% increase in online sales. This is a strong indicator of great dividend payout stability moving forward. Weekly cash flow strategy, JNAPRJUN September 2nd week, Altria $50.60 forward dividend and yield 3.60x. Dividend date September 14, 2021. Dividend payout 0.86. Through its subsidiaries, it manufactures and sells cigarettes, oral tobacco products and wine in the United States. Primarily under the Marlboro brand, cigars under the Black & Mild brand. The company also products and sells varietal and blended table wines, and sparkling wines under the Chateau Ste. Michelle names. While overall cigarette volumes have been on a downward trend for years, most Americans are turning more towards a smokeless environment. Altria is moving beyond that business. This includes buying 10% of Anheuser-Busch and a 35% interest in JUL, a maker of e-vapor products. The company also owns 45% of marijuana producer Cronos. Granted, these initiatives could take a while to pan out. But in the meantime, investors will receive a 7.1% dividend yield, weekly cash flow strategy, JNAPR September 3rd week, W.P. Carry. Inc. $76.60 forward dividend and yield 4.21 dividend payout, $1.05 x, dividend date September 29, 2021 W.P. Carry. Is a great long-term dividend stock. A real estate investment trust. Not all REITs are created equal. REITs which are specifically designed to pay generous dividends. And this one pays well. W.P. Carry offer a generous 5.5% dividend yield at recent prices. It's well above the 1.3% from an S&P index fund. It also beats the 3.2% you'd get from an average REIT. W.P. Carry has increased its dividend annually every year since its 1998. This put it right on the cusp of becoming one of the dividend aristocrats. That's a group of companies with at least 25 straight years of increasing dividends, proving over time that they view dividends as a cornerstone of how they return value to shareholders. W.P. Carry is a great dividend stock with a great history, a generous yield, and a differentiated investment approach that works well inside this dividend portfolio strategy. Weekly cash flow strategy, JNAPR September 4th week, Cisco Systems Inc. $56.69 forward dividend and yield 1.48x, dividend date, July 2, 2021 dividend payout, 0.37. This company designs, manufactures, and sells Internet protocol-based networking and other products related to the communications and information technology industry. Over the last decades, Cisco has been dominating its core networking market. During its fiscal year 2021, which ended on July 31st, revenues increased by 8% year-over-year to $13.1 billion. Cisco's dividend, which currently yields an attractive 2.6%, seems safe. Unsurprisingly, management confirmed its intention to return at least half of the company's free cash flow to shareholders, as it did in fiscal 2020 and 2021, with dividends and share buybacks at 59% and 61% of free cash flow, respectively. A solid long-term mid-single-digit revenue and profitability growth should lead to dividend increases. What's more, Cisco can sustain its dividend during a potentially prolonged recession. It offers us a safe, attractive, and growing dividend for investors. It's not how much money you make, but how much money you keep, how hard it works for you, and how many generations you keep it for. Robert Kiyosaki, Weekly Cash Flow Strategy, Feb. May August November 1st week, AT&T $27.24 forward dividend and yield 2.08x, dividend date October 8, 2021 dividend payout, 0.52. We all know AT&T. It provides us with telecommunication, media, and technology services worldwide. They operate through communications, Warner, Media, and Latin America's segments, offering wireless voice and data communication services, video and targeted advertising services, broadband, including fiber, and wireline telecom services. With a deal to merge Warner Media with Discovery, AT&T has completed a costly round trip into and out of the media business. We'll be keeping a close eye on AT&T when the time comes for us to rebalance the portfolio. The Warner Media deal will allow AT&T to reduce its debt, but the company is going a step further to make the dividend more sustainable. The company is targeting a dividend payout ratio of 40% to 43%, so as much as $8.6 billion will go toward paying dividends. Weekly cash flow strategy, Feb. May August November 2nd week, the Blackstone Group Inc. $127.09 forward dividend and yield 3.02x, dividend date July 30, 2021 dividend payout, 0.82. The Blackstone Group is an alternative asset management firm specializing in real estate, private equity, hedge fund solutions, also provides capital market services. The firm's corporate private equity business pursues transactions throughout the world across a variety of transaction types, including large buyouts, special situations, distressed mortgage loan, mid-cap buyouts. Blackstone invests for the long term to build successful, resilient businesses that can lead to better returns, stronger communities, and economic growth that works for everyone. Weekly cash flow strategy, Feb. May August November 3rd week. Apple Inc. $146.83 forward dividend and yield 0.88x. Dividend date August 6, 2021. Dividend payout 0.22 prior to taking over officially as CEO of Apple from co-founder the late Steve Jobs in 2011. Many people worried that Tim Cook wouldn't be able to match his predecessor's charisma and showmanship. But Apple shares have ballooned more than 1,000% since Cook took over, and the iPhone maker surpassed oil giant Saudi Aramco this year to become the world's most valuable company. Apple Inc. designs, manufactures, and markets smartphones, personal computers, tables, wearables, and accessories worldwide. There may not be any eye-popping changes to this year's device, but it is likely to continue the impressive sales growth triggered by the iPhone 12. The iPhone 13 will play an important role in that regard, as it can encourage upgrades and bring more users into the Apple ecosystem because of the improvements it packs. That's a solid reason why investors should continue holding this 5G stock, as it now has a new growth driver to count on. Weekly cash flow strategy, Feb. May August November 4th week. Caterpillar Inc. $196.82 forward dividend and yield 4.44x. Dividend date July 19, 2021. Dividend payout 1.11. Caterpillar Incorporated manufactures and sells construction and mining equipment, diesel and natural gas engines, industrial gas turbines, and diesel, electric locomotives worldwide. The company's resource industries segment provides electric, rope and hydraulic shovels, draglines, rotary drills, hard rock vehicles, type tractors, and mining trucks. The transportation segment offers reciprocating engine power generator sets, reciprocating engines and integrated systems for the power generation. The company also offers financial products providing finance leases, installment sale contracts, and working capital loans. Caterpillar is what's known as a cyclical stock, and you can see that its business continues to operate in cycles. It may be one to watch closely. Paying a premium for companies that aren't growing and that are dependent on commodities can be extremely risky. Remember, growth stocks are companies that increase their revenue and earnings faster than the average business in their industry or market as a whole. Businesses that can grow faster than average for long periods tend to be rewarded by the market, delivering handsome returns to shareholders in the process. Growth stock investing involves more than picking stocks that are going up. Unlike value stocks, growth stocks are more likely to be more expensive than the average stock in terms of metrics like price to earnings, price to sales. Weekly cash flow strategy, June September December 1st week. Pfizer Inc. $43.94 forward dividend and yield 1.56x. Dividend date November 4, 2021. Dividend payout 0.39. Pfizer Inc. discovers, develops, manufactures, markets, distributes, and sells biopharmaceutical products worldwide. It offers medicines and vaccines in various therapeutic areas, including cardiovascular, metabolic, and pain under the Eliquis, Chantix, Champix, and Premarin family brands. The company also provides medicines and vaccines in various therapeutic areas, such as pneumococcal disease, meningococcal disease, tick-borne encephalitis, and COVID-19 under the Prevnar 13, Prevnar 13, Nimenrix, and the Pfizer-BioNTech COVID-19 vaccine brands. In addition, the company is involved in the contract manufacturing business. It serves wholesalers, retailers, hospitals, clinics, government agencies, pharmacies, and individual provider offices. Pfizer and Merck are beginning Phase 3 studies of their respective oral COVID-19 therapy candidates. Wholesalers, retailers, hospitals, clinics, government agencies, pharmacies, and individual provider offices. Pfizer and Merck are beginning Phase 3 studies of their respective oral COVID-19 therapy candidates. Weekly cash flow strategy, June September December 2nd week. Johnson & Johnson $164.36 forward dividend and yield 4.24x. Dividend date August 23, 2021. Dividend payout 1.06. Johnson & Johnson researches and develops, manufactures, and sells a range of products in the healthcare field worldwide. It operates through three segments: consumer health, pharmaceutical, and medical devices. Johnson & Johnson is behind some of the most well-known health and personal care brands in the world. Under the Johnson & Johnson brand are names like Band-Aid, Tylenol, Johnson's Baby Products, Benadryl, Motrin, and Listerine. J&J is extremely profitable, turning $20.2 billion of its 2020 revenue into free cash flow, a conversion rate of 24%. Its balance sheet currently holds $25.2 billion in cash, equivalents, and marketable securities. Shareholders have enjoyed many years of rising dividend payments. Its current annual payout is $4.24 per share, which at recent share prices amounts to a yield of 2.46%. That's not too shabby, considering that the banks now pay interest of just 0.06% on average. Weekly cash flow strategy, Mar, June, September, December, third week, Avery Dennison Corporation. $216.94 forward dividend and yield 2.72x. Dividend date August 31, 2021. Dividend payout 0.68. Avery Dennison Corp. Manufactures and markets pressure sensitive materials in the United States, Europe, Asia, Latin America, and internationally. The company has a label and graphic materials segment that offers pressure-sensitive label and packaging materials. It provides products to the home and personal care industry, beer and beverage, pharmaceutical, wine and spirits, and food market segments. The company's retail branding and information solutions segment designs, manufactures, and sells brand embellishments, graphic tickets, tags and labels, and sustainable packing solutions. The Q1 2021 earnings call was encouraging for shareholders with the CEO's message of a strong start to the year with revenue up 11%, EPS 45%, both well above expectations, and strong free cash flow. The favorable results were driven by improving and broad-based volume and productivity gains across the portfolio, as all three of their operating segments delivered strong sales growth and significant margin expansion. Weekly cash flow strategy, Mar, June, September, December, fourth week. Lockheed Martin Corporation $349.52 forward dividend and yield 11.20x. Dividend date August 31, 2021. Dividend payout 2.6. Lockheed Martin Corp. is a security and aerospace company, engaging in research, design, development, manufacture, integration, and sustainment of technology systems, products, and services worldwide. It operates through four segments: aeronautics, missiles and fire control, rotary and mission systems, and space. The aeronautics segment offers combat and air mobility aircraft, unmanned air vehicles, and related technologies. The missiles and fire control segment provides air and missile defense systems. The rotary and mission systems segment offers military and commercial helicopters, ship and submarine mission and combat systems. The space segment offers satellites, space transportation systems, strategic, advanced strike, and defensive missile systems. Growth and a generous dividend make it a balanced stock for long-term investors. The weekly cash flow strategy, January, April, June, September, first week, Wall, March, second week, Altria, third week, WP Carey, fourth week, Cisco, February, May, August, November, first week, AT&T, second week, Apple, third week, Blackstone, fourth week, Caterpillar, March, June, September, December, first week, Pfizer, second week, Johnson & Johnson, third week, Avery Dennison, fourth week. Lockheed Martin. The size of your success is measured by the strength of your desire. The best time to plant a tree was 20 years ago. The second best time is right now. Chinese proverb. Nothing in this life or the next will ever mean as much to me as my 4 children, Shakenya, Derrick, Christopher, and Leah. For your unconditional love and support. To my sister Deborah Moore, your early morning video calls are always on time. I love you. M.A. I'm forever grateful for the 2 books you gifted me. They changed the course of my life. As a Man Thinketh, and at The Richest Man in Babylon. Thank you Tomoko and Lucky, for providing me a quiet space to work, study and grow every day. Thanks Debbie for the constant encouragement with every call. And to my entire family, my extended families, Thomas, Moore, Clanton, Wallace. Asset, anything having commercial or exchange value that is owned by a business, institution, or individual. Cyclical stock, stock that tends to rise quickly when the economy tunes up and falls quickly when the economy turns down. Dividend, distribution of earnings to shareholders, prorated by class of security and paid in the form of money, stock, scrip, company products, or property. Dollar cost averaging is an investment strategy that aims to reduce the impact of volatility on large purchases of financial assets such as equities. By dividing the total sum to be invested in the market into equal amounts put into the market at regular intervals. Dividend Reinvestment Plan, ISA program that allows investors to reinvest their cash dividends into additional shares or fractional shares of the underlying stock on the dividend payment date. EBIT, earning before interest and taxes. EPS, earnings per share. Entrepreneur, a person who takes on the risk of starting a new business. Free cash flow represents the cash a company generates after accounting for cash outflows to support operations and maintain its capital assets. Fractional share, a unit of stock less than one full share. Growth stock, stock of a corporation that has exhibited faster than average gains in earnings over the last few years and is expected to continue to show high levels of profit growth. Index fund, whose portfolio matches the of a broad-based index such as Standard & Poor's Index, whose performance therefore mirrors the market as a whole. IPO, initial public offering or stock launch, is a public offering in which shares of the company are sold to institutional investors and usually also to retail investors. This process is also known as floating, or going public. A privately held company is transformed into a public company. Interim dividend, declared and paid before annual earnings have been determined, generally quarterly. Most companies strive for consistency and plan quarterly dividends they are sure they can afford. Price to earnings, price of a stock divided by its earnings per share. REIT, real estate investment trust. Tax, loss harvesting, the selling of securities at a loss to offset a capital gains tax liability. Yield, percentage rate of return paid on a common or preferred stock in dividends. Please note the information contained within this document is for educational and entertainment purposes only. All effort has been executed to present accurate, up-to-date, reliable, complete information. No warranties of any kind are declared or implied. Readers acknowledge that the author is not engaged in the rendering of legal, financial, medical, or professional advice. The content within this book has been derived from various sources. Please consult a licensed professional before attempting any techniques outlined in this book. By reading this document, the reader agrees that under no circumstances is the author responsible for any losses, direct or indirect, that are incurred as a result of the use information contained within this document, including, but not limited to, errors, omissions, or inaccuracies. So remember to always be polite and respectful to the people you meet along the way. Maintain your integrity, which can be extremely difficult. Keep your faith in God. I'm still a work in progress. God's not finished with me yet. There's a song by Layla Hathaway that keeps playing in my head as I write this page. When your life was low, one of my favorite lines is, "Always remember, my friend, the world will change again, and you may have to come back through everywhere you've been." So keep your faith and positivity levels high at all times. It's never as bad as it appears. Because if you do have to pass through again, that may be the one thing people remember most when your name is mentioned, so just add a little kindness and integrity to the mix, and remember nothing can dim the light that shines from within. May God continue to bless you on your journey to financial independence and creating generational wealth for you and your family. Truly, the best revenge is your success. Remember, God will prepare a table before you in the presence of your enemies. D.C. Thomas. 3 audiobook collections, 6 book collections.